Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab? Thank you. And how are we doing in YouTube this morning? And how are we doing in YouTube there? All right. Thank you, Mike. Thanks, everybody. Well, good morning. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord TraderLab community. There's no cost to become part of this community. It is a community of like-minded traders who've come together to leverage their collective experience. There isn't one way to trade, but there are certain elements that one will come to understand over time about the realities of the business of trading. And many of us start on our journey in this business with really not understanding what we're trying to do or the environment that we're operating in. And we most often bring our outside world experiences, now this is logical, and apply it here. However, this is like being on a different planet because the rules that tend to work in the outside or our everyday experience are not applicable here. In fact, if anything, when we bring those beliefs here, we are actually working against our own potential sustainability. So the purpose of the TraderLab is to help you understand how the market works, why it does what it does, and how at times you can get in alignment with it. In addition, I've shared 60 PDFs of structured trades that I have developed over the years, and they really form a basis. And I'm not saying fundamental, I'm saying a basis of a foundation for developing traders to vet and develop a statistical edge when operating in a random environment. Now, most of us come into the business thinking that we can predict what the market will do based on canned plug-and-play indicators and think that the mix of indicators and time frames is somehow going to become an ATM in the basement. And I'm going to suggest, depending on your experience, that even though we all have winning trades, that might not be the path to sustainability. And of course, past performance is never indicative of future results. If you're not where you want to be, then you might want to take advantage of the TraderLab. There's a link in the bottom of YouTube if you're visiting, and it is available to everyone at no cost. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. The purpose of this stream is to help you understand really the business of trading. Trade calling doesn't help you, but in the library of webinars that is in the Bookmap Discord TraderLab community, there are streams in there with real-time narration up to almost 5 hours long. So if you're inclined, get in your Barca lounge and you can watch those and see this develop in real time. And the reality of trading or as a day trader is the ability to detect change and also to have structured trades that can align. Now, the thing about structured trades is you know where your trade might show up. You're not making it up. This is not a video game. And I know many of us approach this and, it's a dopamine, adrenaline, thing, and we're chasing this market around. Well, the business doesn't really work that way, at least from my experience. The way the business works is probabilities. It's no different than gaming. So if you understand how casinos operate, they only play games with an edge. They don't make games up. If they pay a gambler, they don't change the game or skip the next hand. They just deal the cards. Why do they do that? And why are they successful? Because they only play games that have an edge that favors them, even though they know the gamblers win over time. If we are gambling, we are going to have winning trades. Absolutely. It doesn't take any skill to have a winning trade. It does take skill in order to have the potential for sustainability. So the winning trades are not the issue. The issue is sustainability and only interacting when you have an edge that favors you. And you will pay the gamblers. If the casinos could have figured out how not to pay, they would have done it. So start there and let's walk forward together. And thanks again for visiting the TraderLab. By the way, one little announcement. We have a federal holiday tomorrow, June 19th, and it's 2025. It's called Juneteenth. So the market will be closed tomorrow. There will be no stream tomorrow, but I will be back here on Friday. And of course, the library of webinars is available to all of you in the TraderLab. So if you miss trading tomorrow, feel free to take the time to review those webinars. And I'll show you that later. Now, higher time frame. Now, yesterday, if you remember, and you should always review these streams if you're inclined, because every day the market and the behavior of the participants builds on top of each other. This is the volume profile, and if you're not familiar with this, don't worry about it. You're going to need to roll your sleeves up and change your thinking. Now, when I say change your thinking, I'm saying is the way you view the market. Many of us view the market through the lens of indicators, and that's fine if you have an edge with that and you're a profitable trader. No problem with that for me. The thing is, what is the market? It is a shopping experience. And why is it shopping? The market advertises for pricing. It's no different than your supermarket, except in our time frame, if you will, it's happening in all fractals and time frames. So you can get down to microstructure, and there's a little auction going on there. What's too high? What's too low? What's retail? And if we find a retail price that's mispriced, the market will not stay at that price. The participants will go, nah, we're not paying that. Now, we do that in all fractals and time frames. So this volume profile shows us when price is up here, as an example, you notice the volume, which is on the left, it disappears, it dries up. Why? There's no buyers up here. I'm not paying that. Get out of here. And then the market goes lower to find the buyers. This is kind of the auction. And then wherever the high volume is in the auction, that's considered a retail price. And you'll notice on this day, as an example, too high, too low, and the yellow line is a retail price. On the following day, we come up and test it. Well, it was too high there, and now it's too high there. I'm not paying that. Now, to take it a little higher time frame, this orange line is the retail price for all the volume in here, from there to there. So swing high to swing low. This is called trading in fractals. So the idea is, think Russian dolls or Matryoshka dolls. Now, let me take you into yesterday. Yesterday, and I mentioned if you followed the stream, for me, it's a hard day to trade. And I'm going to tell you why. We opened basically in the ETH volume point of control, and this is called a micro composite volume point of control. Never mind the terminology. There's a glossary in TraderLab. This is the retail price for the whole swing. And the trend is up. So now what do you do with this? Well, let's look at what happened. We open here. We're opening in what's called fair price. So for the whole thing, this is fair. Now, when you open at a fair price, the potential is for two-sided trade, so a lot of abuse. And that's a hard trade for me. Now, let's go look at the day before yesterday. Market was up here. Value, this yellow box is what's called the value area, 70% of the volume. This is the retail price. So having a lovely time. In the morning, we checked this price, the retail price of the next higher time frame, intermediate, too low. Oh, it's on sale. And we took longs in the TraderLab, many, you don't have to, and the target was this. So, and squeeze the stops out above this high. This is part of that plan that you might have in TraderLab, and you have to vet that. So all good. Going to the moon, Alice. Lovely. And then, of course, we get the war thing going on and all that. Actually, it was here. By the way, I got to point something out to you. This was too low. On this day, This price was too high. This price was the target. Now, let's go a little further. On this day, and I'm going to get back to yesterday, this was the retail price. So too low, too high. Now, opening here, it's like, what's going on? So this was the target for any longs yesterday or a place to get short. And this was the location for targets for any shorts. The idea being we were going to trade in here. And then the news came out that, the U.S. might get involved, and it changed the configuration of the market. And then we had some really nice short trades yesterday. And this is after the stream when the news came out. But what was our target? There. Isn't this interesting to you? And there's another piece to this. Look, too low, retail. Too high, value area. Low volume node over here. This is like a consolidation. We fell out of it. If I fall out of it, I can come back and check it. That was the target. Missed it by, I don't know, a point or something. No precision. Remember, horseshoes and hand grenades. Then what? Out the window. War. Target. Cover. Then what? Retail price. What do? We watch now. Let's go a little further. I'm just showing you another view of the same thing. Remember, this is a single, by the way. Target. Too low. Up we go. This is one of these naked volume points of control. Too high. Notice a process. We come down. Too low. What was our target on this day? Too high. Single. Too low. Here. Who knew? Too high. That's a value area. Target. Too low. Retail. Who knows? Single. Yesterday's high. Target. So today, now I'm going to take you into today. So far, it's about 10:15 my time. Yes, don't forget. Yesterday's sell-off. Target. Today, open. What do we anticipate? Remember, no prediction. We anticipate that anyone who thinks war is imminent will sell. So we get our early sellers. What's our target? Value area low. Where does it go? This orange box here, that's considered value. And we have yesterday's retail price. Too low. And if we don't fall out, then what happens? The shorts in here and the shorts from the early morning selling are now on the hook. And what do? Squeeze, come across here to the opposite value area. Take out the first hour's high, it's called the initial balance, and now this has moved from down here, because it's auctioning, going, what do we think of this? Too low, too high, retail. We leave it, too high, too low, and then we can rotate, and now we're in something called mean reversion. Mean reversion is what's called outside-in trading. And where's the potential, not prediction? The shorts in here, the same as the shorts in here, have their buy stops here, and this was the retail price that we left behind. If a retail price here is too low, is it logical to you that we might come back and check the retail price that we left? So, potential to get long for mean reversion, which is longs only for me in this configuration. Shorts are counter trend in my little view, and it's only a time frame thing. I always suggest to developing traders that they align with the advancing army. If you want to trade counter trend, that's your business and your edge. I just sort of go, there's counterattacks, if you want to think of this like armies, and then there's the army that's marching forward. Statistically, what gives you a better opportunity? Where's the stops? There's the next target. Now recommendations. Now, RTH open. So, by the way, if you have questions, post them. I'll take a look. I hope you guys are doing okay today. Please give a like if you're visiting in YouTube. This is about the business of trading. The TraderLab is a community of like-minded traders. This is an advanced trading methodology. Now, the term advanced doesn't mean complicated. It's actually simple. I believe anyone can learn how to trade if they do the work. What is not simple is operating in an environment of 100% randomness 100% of the time. So when you think it's complicated, it is not complicated. What it is random. And I suggest you rethink. And the other part is, because of randomness, we seek certainty. What happens if you're in an environment where there is no certainty? Then maybe you're trying to solve for certainty where it doesn't exist. If you can't have certainty, and if you think of the words like confirmation and things of that nature, mentally you're in a place that is not dictated by the business you're trying to be in. It is dictated by your emotions. Now that might sound like, what am I talking about? I'm talking about the decisions you make that you're not even conscious of. We are wired, and this is really important, to avoid risk. Imagine if your primal wiring, that reptilian brain that is really kept us from being devoured by those apex predators as we evolved as a species, that did a really good job of protecting us, because here we are. But we bring that wiring and primal behavior to this business because we are risk adverse, of course, and we look for certainty. I want to be sure there's no saber-toothed tiger behind the tree, or worse. So we look for confirmation. So we walk into business bringing our primal wiring, and in order to fulfill our need for certainty so we don't get bit or worse by the saber-toothed tiger, we spend all our energy looking for certainty, and we use a boatload of indicators and time frames to create certainty. Well, what happens if there is no certainty and you're trying to solve for something that is directed not by the business you're in, but by your primal needs? Have you thought about it? If you haven't, you should come to TraderLab, because you're really, I believe, and again, it might not be appropriate for you and it might not be your truth, but I've been doing this 46 years, and at least for me, I always ended up in the same place, winning trades, but not a sustainable edge, because I didn't have an edge. I didn't know it. Because I had winning trades, I thought, let's make it better. Maybe not. Is that your experience? If it is, and you're visiting in YouTube today, use the link in the bottom of YouTube, visit TraderLab. Now, RTH open. What do we anticipate? And there's a couple other pieces. This is the ETH volume point of control. This is yesterday's retail price. Naked volume. So let's think about what this says. This is where the fair price ended up on yesterday's close. Now, it's fair based on what the market knows, but it might become unfair. Who knows? What is the fair price in the ETH? The overnight volume point of control. The high volume, remember, is shopping. If it's too expensive, I'm not paying that. If it's too low, oh, it's on sale. What else do we have? The value area low. So I'm inside of value. Now, of course, the market can do anything. I have to give you another little piece down here. Yesterday's low, and of course, there's stops under there. And I also know the possibility is to take out yesterday's low, trap more shorts, and come in. So for me, any shorts I take in the morning, and I'm going to show you that trade, but I have to set this whole thing up for you. So that's why I go over all this, because in a trade plan, if you're in TraderLab, this is what you're doing before you put the first trade on. You are preparing. You're looking at the last auction with his ETH, and this has possibilities too. Now, this low was right above. I got to show you this because this is one of those moments where you go, this low. Or let me just see. Yeah, this one. So let me see if I can get back here for you. This is like around 17 and change. And we were, the ETH low is one tick above this. That was perplexing because why didn't I get below here and either come in or whatever it does? Didn't do it. So it's if this, then that. If not, then what? The then what is maybe we found too low in the ETH, but it's possible we're going to come here. We're going to come here. First trades are shorts. Now, not a recommendation. None of these are recommendations. I'm sharing trades, and none of these need to be your trades. Any trade you decide you want to, anytime you want to participate in the market, the first thing you do is build out a trade plan, and then, as they say, act accordingly. This is the retail price. Now, if this is, so we have two things here. Settlement, and we have a high probability of checking the settlement, which is this. We have a high probability of checking that. There's a bunch of statistics on this. I'm not going to spend time on them. They're available in TraderLab. And then this and out the bottom. Okay. So my first trades were shorts, but I also am aware that if I get let's call it follow-on selling, and these guys can get trapped. But I don't predict. I just sort of put the helmet on, get alignment. So I know right here, possibility is I'm getting sellers who, based on the news and everything, who want to get out before the U.S. might get involved, right? So RTH open there. Overnight volume point of control, language. By the way, what makes this simple versus complex? This is the language of the market. So if you've ever played a musical instrument or learned a foreign language, I speak market. I don't use any indicators. I do use order flow and the information that I can garner from market by order data, icebergs, stops, all this kind of stuff. But I don't have the spaghetti in here that's telling me get long, get short. I found that it's just a waste of time for me. If you don't understand market mechanics, you're just going to be letting these plug and play indicators, and you're looking for them to do the heavy lifting, even though they're going to have winning trades. The situation with trading is that the market is not one-dimensional. In other words, you can't put the market in a box. In my opinion, what you need to do is you need to be flexible. You need to adjust when the condition changes, and you need to know where your trades will show up and still accept the risk and the random outcome. So if you don't know that, then who might? It's certainly not an indicator. How do you think? The reason we have trouble, I think, or a lot of us have trouble with indicators, is it's kind of like a one-size-fits-all thing, but the market doesn't operate like that. The market goes into directional movement, and it gets imbalanced or chops around locations, and that's where the term getting chopped up comes from, because most retail traders don't know the difference in condition or how to adapt to it. If that's you, just think about it. So this is the RTH open. This is developing volume point of control. This might be too high. This might be too low. And of course, this is the value area. So for me, the first trades are short, and I know I might be getting jammed. So I'm okay with that. I just follow a plan. Me, just the way it is. So right here, I'm in 1 second. I cannot do anything here. I just blinked, and I see my sellers. So I see my sellers. This is called VPOC migration. Now, this is an advanced process, and I always say in TraderLab, not to trade this, but to study it. It is actually a structured process, but the problem with it for developing traders, it is not mechanical. So, and most developing traders are in a hurry. And let me explain in a hurry, called FOMO. And if you don't know all the other pieces, this is going to be a problem. because it's used differently in different conditions. And I can only encourage all traders who come to TraderLab to try to take advantage of what I share. As they say, I've been there, I've done that, and why should you pay the price I have paid making the same errors you will make? So what does this say? Now we're talking language. Well, that's too high. I don't know. But what is this? Too high. VPOC migration. Too high. VPOC migration. Too high. This is my short. All right. This clueless. This short. Now, if it comes, now here's a problem with this. I know that if I get these sellers, the market, and now this is the opening swing high, I'm going to mark it. I know that there's stops here, right? You get sellers. Where do they put their stops? Maybe the high of the day. What do you think? So I know that. And if you're in TraderLab, you know it. So the thing I have to be very, very concerned about is a counter rotation to take these guys out and then a continuation down. So in my plan, I am already prepared to take a stop if I don't get risk neutral and put the trade back on again. That's just, and that's why I always say in TraderLab, don't trade the open. So let's look. So I took a short here and I'm looking for lower. And, I'm not saying this is any good. I'm just saying that's what I did. Now, I'm monitoring here because I also know the possibility. Now, I get here, which is a location, and now I come across. This is a dangerous condition for me now. But let me explain what else is going on here. I'm looking for this. Because often when you have a sell-off like we had yesterday, we're going to take this low or test this low and then maybe come in and squeeze. So this was my extended target and then, a runner. So anyway, risk neutral and remember vulnerable. Right here, now I'm going to talk again about VPOC migration, how you might use this. This is the current retail price. Now what creates these things? Volume. As this yellow line represents the highest volume in the developing time frame, and it's going to move around. And the thing about it is, let's think shopping. Oh, I see we're getting our sell-off. Oh, nice. We'll come back to that. This is the new retail price. When we cross above it, that is suggesting warning Will Robinson moment. Now, I come across, this is now resistance. This is too high. This is too low. Resistance, support, watch. Now, I'm very conscious of this, but I'm still, because right here, the teeth are shattering. Because I know, based on at least my interpretation of what you see happening in the auction, is that we found a price, think shopping in the store, that might be too low. And I say might, because I don't know. If this is still too high, remember what happened here. I'm not paying that, sellers. Here, right here, there's absorption, and the buyers are above the sellers. Okay, counter rotation, I don't know. And this is too high. Retail. When I cross above, trouble, but not sure. There is no sure, but so far this is my resistance. See? So, buyers, selling icebergs, absorption, and now I need to clear this. Support. Variable high volume node. Watch. What I'm showing you is trading in fractal. So let's just see what happens. Opening swing, don't forget. So right here, I see what? These guys were absorbed. These guys were absorbed. And I need, for this trade to continue, to break under here and not come above here. I see what? Buying. My buyers were here. That's absorption. So I know my buyers are here. I come under. I got my sellers here. Buyers are back in again. I have to stay under here. Notice the behavior right here. I see a sweep. This is not good for my short. I am out of the trade on this. Okay, flat. VPOC migration. Let's continue the story. This is the new retail price. I'm now out, and I suspect now we're going to take the stops out. What do I know? I have shorts in this leg, no clue, and everything was fine till this, okay? So can you see, I want you to see the behavior, because I'm not using indicators. What I'm doing is I'm using volume. The same, it's an indicator of sorts, but it's reflecting participant behavior, not some price derivative. This is direct. This is like right here, right now, order flow, sellers, absorption, sellers are here, these buyers are absorbed. Why? What about this? Buyers are here. What about this? My sellers are here. What about this? Too low? Too high? New retail price. If that's too low, this is the retail price. That's too high. It's resistance. Break high. Hasta la vista. Thanks for playing, Tom. You get a coupon to the buffet. What's this? If that's too low, I'm going to label it. And all I'm doing is I'm reading the auction. I'm not doing anything magical, and it doesn't mean I have trades. It means I have a way to observe the changing perception of value. And don't forget where the stops are. So what do I know? Maybe too low, maybe too low, maybe, and what do I see happening with this yellow line? What does the yellow line represent? Value. Value is like shopping in your store, so the retail price. So in real time, the pricing and the valuation is changing based on the volume that happens at a price. And if a price is too low and I check it, it's on sale then, because the perception is, and the buyers were right here, that this might be too low. It's mispriced, in other words. It's like you shopping and you find an old bottle of ketchup in the back, and it's 20 cents less than the current retail price. Oh, what a discovery. Same thing. Sell sweep suggests higher. So right here, when I saw this, I said, oh, that's it, you know. So anyway, I'm out of this thing here. So that trade's over. Let's watch now. Too low? Absorption. Sellers are here. Buying icebergs. Retail price. Moving higher. Where's my stops? Just watch. So what do you do with this, right? What do we know? Let's come back. These guys are under the bus. So right here, this is what I know. Let's look at what we know. Now I'm in minutia. I'm just trying to give you a sense of market mechanics, you know, and you have to vet everything for yourself. I know everything is good here for me on the shorts, and I am aware of this thing. You know, this is sort of a got to be, you know, okay, problem, out, support, stops, there, looking for longs, VPOC migration, support. These are longs if they're in your plan, or they are not because of the opening swing. So you're trading into the opening swing. Now, this is called a single. Let me show you what this thing is. Now, I'm kind of spending some time in, you know, I try to spend time in different elements. I want to show you what this element is. I have it here. This is yesterday. A single, this is what we were trading before the news. So it was outside, you know, rotational trading, mean reversion, underline, underscore mean. It is mean because it's you're trading this. And then the news came, we broke out, and now we had a new auction down here, and the highest volume was here, going to zero, except we tested that. Right? This is called a single. And what it is this is the rotation or distribution. It's resistance. And then when we ripped out of this thing, and the short set up under here, down to here. So that's why the shorts were so good yesterday. Once, the news impacted it, then we were doing this. So we were doing the same, what we were doing up here when the news came, we ripped, and now we had a new auction down here. And this is where we agreed that's the retail price, but that was the target. So now if we can't get above this, we can, do whatever. So this is the next resistance coming up. It's called a single. And it's there. Now that's the next place of resistance. Like a knife through butter. Now there's more. Let me open this up. So it's longs, So shorts early, now longs. And we have targets above the ETH high, over 90% probability we take out the ETH high or low. Now, remember what I showed you just a little while ago. The ETH low was down here. Well, if we found too low, and we don't think, unless there's a tweet or news, anything can happen anytime, and we didn't get under yesterday's low, and we just tested this area and the retail price, who knows? Do you think there's a higher probability we get here with over a 90% probability, past performance not indicative of future results, or we get here? I'll leave that up to this astute group of traders. And now there's another piece. Yesterday's value area high. If I check the value area low, and don't forget, failed to get under here, and I find too low, and now I have over a 90% probability of coming here, and the value area high is here, and the stops are over yesterday's high, and the naked volume point of control is open above, is it possible that we get to the ETH high? And what else do we have? Taking you back to higher time frame. Now you're going to find this probably make you crazy, but I'm operating in multiple time frames as you think about it. Remember 67.25 in this whole consolidation, which is what we're trading. This is the retail price. So if I reject this down here, I have my ETH high in front of this. This is my retail price in an intermediate time frame. And the shorts in here from yesterday have their stops above that high. And this is our former retail price. So too low, intermediate time frame, retail. If too low, then yesterday's high. Who's on the hook? The shorts. There, not a recommendation. That's today. So that's what we're doing. Who knows, right? Hold on one second. I got some stuff on here that should not be on here from yesterday. I think we want to get rid of that. Okay. So this is another target right here. Value area high. Value area low was a target, right? So we're traversing the value area. And then, of course, we got the stops here, and then we got that. So you know our targets coming up, and you can make a note of these. They're not recommendations. It's just market mechanics. Who knows? This is another target. This, and then we have up here, whatever happens, happens. So let's look. Let's follow the yellow brick road. VPOC migration, VPOC migration. And if you have questions, post them. I'm going to come up. I don't know quite where we are time-wise. Oh, wow. This is only 9:30. Got a lot to do here. Now, at 9:30, we have something called the IB stat. And there's over a 90% probability we take out either the first hour's high or low. And it's maybe a 98% probability, and you have to vet that for yourself. By the way, just for your dining and dancing pleasure, there is approximately an 87% probability we take out, hold on one second, 82% probability we take out either yesterday's high or low. Well, if you haven't noticed, we did not get yesterday's low. So unless, again, there's news, and this is the current low of the day, we're going for yesterday's high and the naked volume point of control on top. This is how statistics might help you. And nothing is predictive. It's always maybe. So maybe we'll get the stops out by the end of the day. And don't forget, we have FOMC. So as Dirty Harry used to say, good luck with that, Do you feel lucky? FOMC. So the market may slow down. I don't know. And we might not get these targets or not until FOMC and we get the volatility. So market can do anything from here. It could go into rotational trade. It can go into park. It doesn't really matter. What matters is you have a plan. And that is what your job is to have a vetted trade plan. Too low. New retail price. Over 90% probability we take out the first hour's high. So at 9:30, this high is set. It's right there. So, and we get VPOC migration. All of this is suggesting higher. Now, in the TraderLab, we have a trade called the IB continuation trade. The IB continuation trade, if we think we're in an uptrend, maybe, then the thing you want to do with this is get long, and for the targets up on top. That's a structured trade. So there's a couple ways to work with this. One is if we extend outside, we look for a pullback. The other way is if we take this out, we can then rotate outside, and then it becomes something called mean reversion. This is the retail price, and you'll notice we've been kind of just rolling along here. Well, we do anticipate always counter rotations. Why not? Because everybody's trailing their stops, and the market, if it runs out of buyers, and notice what comes in over here, and you see the selling icebergs, it's like a lid, then we can counter rotate. Now, you don't know, of course, where it's going to go, but let's look at what we do know. Sellers were here. Here, you can look here. Sellers, sellers, sellers. Why isn't the market going down? And then we break high. Absorption, so buyers. Buyers. Sellers, sellers. Why isn't the market going down? Absorption. Iceberg. Buyers. Buy sweep. Right here, potential for counter rotation. Buyers. Sellers, sellers. What happens here? Absorption. Going higher. Sellers, sellers. Where were my buyers? Under here. Going higher. Who knows? Absorption. Icebergs. Buyers above the sellers. Sellers here. What? We go higher. What does that say? Absorption. Absorption, absorption. Going higher. Sellers here. Below the buyers. Sellers here. Below the buyers. The buyers were there. The buyers were there. Buyers above the sellers. Absorption. Buyers here. Liquidity. Obstacle. No clue. Seller. Now, buy sweep, buy sweep, buy sweep. All these suggest potential for counter rotation. And the word potential, I want to stress. Where were my buyers? Here. Here. There. See the liquidity? Push higher. VPOC migration. As far as I know, north. Watch. And you've seen this before. So I've got this is blocking. And the thing about this is we don't know. Are the buyers going to consume this? Or are the sellers, it's like Pac-Man. Are the buyers going to eat this up, or are the passive side, the icebergs, going to eat up the buyers? One or the other. Wouldn't you like to know? I would, but I don't know. Well, act accordingly. VPOC migration. This is what I need to see for this to continue. That. And to get through this. What happens? VPOC migration. New retail price. Looking for that. Looking for that. What do I get? Different. Pull back here. What is resistance? Now, this. Let's just watch and see what it does. Too high. Microstructure. And these are not mechanical. What I'm doing is I'm reading the language of the market. And you can learn this if you want to speak market. And no, it's not going to be plug and play, just not the way the world works in trading, at least for me. Too high. Too low. Watch. See? Too high. Too high. Where do we come back? Here. Too high. Too high. Now we're going to be current, and I'll be able to answer your questions. So this is really how you narrate the market. Now, the other part of this is, how do you trade it? Well, structured trades. Let's look at what we know. Too low. What else do we know? Stops are under the VWAP and the mid. We have a structured trade in the TraderLab called VWAP to VPOC. Now, and that's fine. The thing with this is now, and also we know this is too low down here. So this is called mean reversion. Now, the target would be this, but now we have VPOC migration, too high. This throws, as they say, a fly in the ointment. Because if this was sitting up here, this is a structured trade. But if there's more volume here, the language is saying this might be too high. So we have to clear this to get there. Otherwise, this trade might fail. So in TraderLab, what I always talk about, now this is all an individual trade plan. It's not mine. You have to find your groove. With this, you have to get risk neutral. Some traders, based on where they enter, and the actual entry is right here for this trade, right there. And then you need to try to get risk neutral. Your stop would be under here, and you're joining everybody at the mid. Not a good place, but that's the structure. I don't like, personally, trading here. Doesn't mean I don't take trades. I also take stops. And even if I find a place that I'm ecstatic about, I still take stops because I'm in a random environment. So I need to clear this to get there. So for this trade, the entry is here, structured trade, and then you're trying to get risk neutral. The distance from entry to failure is the distance to get risk neutral. And the idea is to buy your stop on your runner. And then the next area, if we clear this thing, which doesn't look like it, but who knows, is here. And if it doesn't get there, you would take a stop. If you're risk neutral, you're going to scratch the trade and your broker sends you a gift basket. Otherwise, if we fall out of here, then we can come back down here. And don't forget, we have FOMC. So, the market might have done its thing and now it's waiting on the next shoe to fall, if you will. So that's a big deal. By the way, don't forget, there's not going to be any stream tomorrow for Juneteenth, June 19th, and there will be no stream and no market, but we'll be back on Friday. So let me take a look at your questions. We're current now. We are in real time. Remember, all of this is available to you in TraderLab, as well as 60 PDFs of structured trades. The actual things I'm discussing in here, but you can actually see examples of participating in it. Some of these are actual trades, others are just screenshots that I did, because a lot of traders are asking me, what are you doing? So, and you can reverse engineer these. There's no cost for this. I'm just sharing my experience. Some of these from 2020, when traders were saying, how did you get this? How did you do that? So I like to help traders. My development, I started in 1980. I will tell you, it was an extremely difficult process. Took much longer than I ever thought it would, and I didn't understand when I started what the problem was. I just thought it was persistence, and I was extremely persistent, and tons of research. When I mean tons, I'm talking years, and really dug into it. And at the time, there were no off-floor traders. All my buddies were in the pit. And I initially was going to get a membership, and I decided after, starting out, I started over a CME, learned classical bar charting over there, and I really was fascinated with charts and, analytics. So I kind of gravitated towards the cerebral aspect of this, the research and trying to understand why something happens, So anyway, I'm just saying that's kind of where I started. This before there were candles or PCs or internet or any of this thing. So, you wanted to learn something, you bought a book or you went to a seminar. That was it. Now, you guys have the opposite problem, in my opinion. You have everything but the kitchen sink out there, and anybody, any YouTuber or streamer can say anything, do anything, and everybody has winning trades. And if everybody has winning trades, they can always show you examples of things that work. The only thing you need, and I see this stuff out on YouTube, and you have too, and I just cringe, because you can run out of time and assets before you actually find out what the business is you're trying to be in. There is no shortcut to this business. If you want to compete, whether it's in the NBA or here, you have to be at the top of your game, and also not do what other retail traders do, because the failure rate is extremely high for retail traders. And I'm going to suggest you ask yourself, why do you think that is? Is it possible they're all doing the same thing? Chasing the latest idea or indicator or AI, it doesn't matter what it is. The same stuff has been around forever. It's just been put in new wrapping so it can be marketed. So, and again, that's up to you, but you need to draw on your own experience. What have you found? What's your experience? Are you waking up with the same results no matter how hard you try and how you tune and tweak and curve fit? That's what we all have done at some point. And the thing is, with the random winners, we're always going to have the winners, and that, I think, is the problem. Winning with a defective process. Have you ever suspected that maybe it's not you and it's not making it better, that maybe you're trying to solve for something with a process that is defective? Consider it. Questions? Let me take a look. Thanks for your patience. If you're interested in TraderLab, there is a link in the bottom of YouTube. You can see it down there under YouTube. You'll need to verify your Discord email. They send you a little code so you can confirm it. Keeps the riffraff out, By the way, so TraderLab is a serious community of traders. It is about the business of trading. It's not romper room. So I know there's a bazillion chats out there, and there's all different, whatever is there is there. Some of it I'm sure has value and may help you, and I would suspect most of it is not worth the dynamite it would take to blow it up, but that's for you to determine, not me. So, if you get value, but random trade is not the answer, guys. It's statistical probabilities. How do you get statistical probabilities? Well, I explained that in my primer webinar that's available to all of you in TraderLab. It's got about 33,000 views. And what it really is about is understanding that you cannot measure anything unless it is anchored. Now, most of us look at our P&L. That is not a measurement of anything other than the obvious thing of what it is. But do you know the difference between random inputs, which creates in other words, the old saying in computers was garbage in, garbage out. In the casinos, they play the games exactly the same way. There's a proven business model. They don't make it up, they don't change it, and they don't have variable inputs. In other words, blackjack is always played the same way, right? They don't change the number of cards or how, their process of how they deal and all, how you cut the deck. It's always the same. So if you're using variable inputs, then you're playing a game that is not the same, which is random in a random environment. You cannot measure it. So if you can't measure it, what are you doing? You're gambling and you're sitting with the gamblers, but you're sitting on their side of the table. How's that going to end? The gamblers win. So do you. But over time, without an edge, I can suggest, most likely, statistically, you will not have sustainability. You will not be in the business. So if your goal is to be in the business, then you might want to use a proven path, which is gaming. Understand what gaming is, and then redirect your effort to extracting a statistical edge with anchored inputs. Is that logical? If it is, then come to TraderLab, because you may find, in spite of all your work, that maybe with some tweaks and adjustments and maybe changing your beliefs. What creates our beliefs? It's not our experience. It's our primal wiring, and we walk into this business with beliefs that have nothing to do with the business. They work great in the outside world. You're not in the outside world. You're in a gaming business. So consider solving for the business you're actually in. Does that make sense? Are you guys tracking? So what have we found? Potentially too high. What about this? This is the VWAP, the VPOC trade. The goal is there. This shifts down. This is your wanting Will Robinson moment. If you can't get here, the trade is, as they say, toast. If you're in TraderLab, you would know that because it's part of your trade plan. Now, it doesn't mean it wouldn't come here, come back across, and go here. For me, trade's toast. The same reason, by the way. Remember, I was talking about exiting the trade. Let's look. This. New retail price, too low. New retail price, need this. What does it do? Break low, test too high. Break low, test VPOC migration, too high. What do we do over here? If you took this here, VWAP to VPOC, let me show you there's a couple places for this. You took this trade, this is your trigger, your entry is there, and you would be getting risk neutral, which would be no problem, and you're going here. But you would have no risk, you would scratch. By no risk, you always have risk, but you would be scratched. When it comes back here, we get the same thing. This is the entry. Watch, right there. And then you're going for this, same trade. Now, let me show you the problem with the trade. VPOC migration. What does it have to do? Let's look over here. What is VPOC migration? What does it have to do? It's got to clear that. VPOC migration. What does it have to do? It's got to clear this. What does it do? Not so much. Do you see something repetitive? It's called participant behavior, and it is reflected in the auction, which is represented by the profile. So this trade is over. if you have it vetted. Sweep, mid, remember there's stops at the mid, right? So anyway, right here, we might have our thing done here because of FOMC. Doesn't mean we can't operate in this, but you have to really question things. This is your variable high volume node. Stops are under here. This is a sweep. This suggests counter rotation. Let's watch. I don't call trades. I'm just showing you behavior. Now, the thing is, right now, this is too high. So if the stops are here, buying iceberg, where are the sell stops? Under here. I consider this a dangerous place to get involved, because what you might get is a rotation and then take these guys out at the mid. What's at the mid? Stops. So this suggests counter rotation. So for me, this is not my trade. Other traders could take this and it can come right back here. Let's see what it does. The sweep is what suggests the rotation. But the mid is here. It's just in my personal plan. I'm not saying it's a good plan. This is along with the exception, for me, of the mid. Other traders can take this trade, and the goal would be to come here. It's called mean reversion. And you can see the structure. This is the outside edge, low volume node, and the market tends to do this kind of thing. That's too high. So the outside edge is over here, low volume node. So and this is an auction. What's too low? What's too high? Right now it's right here. This is like a sandbox. So this is an outside edge. And you've got everything here except location. It has the location, but because of the mid, it's a trade I can't take. If we came outside and scooped these stops out, and then I see absorption, and I got this over here, then I would take a long back to there. Not a recommendation. I take stops. We all do. Notice what was here and here. This creates the possibility. When this comes back in here and you get this here, this sweep, that sets up the rotation. So, but again, I have no trades. But this is an area to observe. Okay? Are you guys with me? How we doing? Lee is asking me with the VHV and the VPOC. The mid is an area I would observe. So I think I answered your question. This is this area. This is what's hard about all of this is it's random. This would be a long for me if it was at a different place. So I just don't have anything to do here. And even then, when we come out, if I come down here, if I don't see absorption here, then I'm just going to sit here and work on my crochet. The thing about trading is you don't have to do anything. Because if I get under here, I can still come out here, the next outside edge. So it really depends what happens right in here. But I would not take a long. And that's not a recommendation. This might be the long in a century. But this is where the objective would be. This would be the next out here, the next obstacle. We'll see if it does it. But again, it's just not my trade, but I don't call trades. Other traders in TraderLab are going to take this trade. Everybody's different, Peppy, would you like to refrain from those comments? I think you're making some noise again there. So how are we doing in YouTube? Please give a like if you find this useful. In the meantime, we're sitting here watching the paint dry. Sweep, absorption, icebergs, stops. If you're an iceberger, that's a new term. It's not going in the glossary. Where do you want to buy? Don't you want to buy into stops? get the other side. That's what's going on here. These are sell stops coming out. And you see this iceberg down here taking the other side. They're absorbing the market orders, the sellers. That's kind of what you're seeing. So this really is interesting. But again, I have nothing to do here. But it's very interesting to observe this stuff. So part of a trade plan might be, well, the trend is up and the market is now galloped away, saying that what is below us might be too low. And if that's the case, then this is an outside edge. There's no precision. And this is right here. So this is all an area for this. This trade would be from here to here without the mid. So with the mid, tourist. Questions? Renewed, if you're here from the beginning of the stream, it goes over why I have a long going here. Because the market is short from yesterday, among other things. We tested key levels yesterday. Review the stream, because basically before the market opens in TraderLab, we come to the market with a plan. We don't come to the market with the ability to predict anything. So the plan directs us how to recognize change. And there were other pieces that came together that suggested if we couldn't get to yesterday's low, because we hit a key target yesterday on the way down, and we can't get back there, then we found too low. If we find too low, then anybody who's short from the open and yesterday can get squeezed. I always say this in TraderLab, and I'll share it here in the stream. The market goes down to go up, and the market goes up to go down. It's a rotational process. So we have found too high at the moment, but that doesn't change how the market behaves. Now remember, stops are here. So that's why no long, even though this is a long structure, trying to go there. If we come out here, I have to be looking. So this is one area. This is the next area. These are called low volume nodes. And what they are outside edges of rotations or distributions. So we can come into these areas and pick, I call them stop picks. And you know, there's stops sitting under the mid. Retail trader behavior. Oh, I'm going to put my stop under the mid. And we also get retail mechanical buyers at the mid. So if we take the stops, then we have to see what happens here. If I get under here, then I'm looking over here. That's it. For longs to come back here. And actually, if we get long out here, it would be here, the scale, and then there and wherever. You know, it's just sequential. And those aren't trade recommendations. It doesn't, just if it comes to a location, doesn't mean I take a trade. It means these are areas. It's like real estate, location. There's slop in the market. There's no precision. And if we're looking for precision, that is not also part of this. There is no precision. There's a lot of slop. So if you have a location, it doesn't mean the market won't go through it, because if there's sell stops here, the market can come through it on the momentum of the market orders, and then we see the absorption. So this, this, like I said, this is a long that I can't take. It's not my plan. How are we doing in YouTube? Guys, I hope you're getting something from this. If you're interested in this, come to the Bookmap Discord TraderLab community. By the way, there's no quick fix. If you want to become a professional, and it doesn't matter, attorney, physician, NBA player, a musician, at a high level, you have to kind of roll your sleeves up And if you're not successful, you may want to consider tearing down and throwing out what doesn't work and replacing it with a process that makes sense to you that you can relate to. I understand plug and play. Wouldn't you all like it? I shared an office with George Lane. He created stochastics, and I think this is when I met George, might have been 1981 or something. Can't remember anymore. And I thought oscillators were the holy grail. I built trading systems around them eventually, and hybrid indicators that I created. And I was a trend follower and swing trader in the big S&P. So everything else was just you put it on and hang out. So it was really a different business back then. We didn't really have day trading. We didn't have algos. We had floor traders. So everything has changed. But I did think oscillators and indicators were it. So I built trading systems to optimize them. So all I was doing was curve fitting. Most of you guys are doing the same thing, one way or the other. Either with your eyeball and you're getting your screwdriver out and you're getting whatever to fit, but it's all the same. I just did it on steroids because I would I would basically optimize and then do walk forward testing and, all this stuff. So when you look back, you're not here now. We are trading the now, not what happened yesterday or even this morning. We are trading the outcome of this morning. We are not trading what happened 2 weeks or 3 weeks ago or a month ago, right? So when you're doing the tweaking and the curve fitting, trying to catch that big move, so when it shows up next time, it's so logical. But what do you do in this? When you apply something that might call it the big move, in between, you're in this. It's a separate plan to trade this than it is to be in a directional move. When you try to put the market in a box, even if you catch the quote big move, all the chopping that goes on when we're in a different configuration, you're not only potentially going to give any gains back, you're going to be in the hole and potentially become a loser. And most retail traders just think it's tuning and tweaking. So next time. Well, what about right now? This is what the TraderLab is about. Kind of help you get a sense of what this business is and maybe give you some tools that you can reverse engineer so you can make them your own. It's not plug and play. Everybody, me too, years back, I remember going to a seminar. And back then, there was no online, so you got yourself on a plane. I went to Atlanta, and I'm in Chicago, and had to stay in a hotel. It was 2 days, airfare, round trip, hotel, meals out, plus the cost of the seminar, which was not inexpensive even then, and walked away with nothing that I could actually use, though it looked really good because I saw examples. And what was it? Garbage. Except it certainly worked randomly. And I can tell you, if you had a magic 8-ball on your desk, that would work just as well. Just giving you some sense of we've all done the same stuff. So I did it. And unfortunately, I did it longer because I didn't understand the business I was in. I thought it was just make it better and tune it and tweak it. But I was using price-based derivative indicators. And I did them on everything. I built things, I was just like you, Trin, Ticky, advancing issues, advancing declining volume, all those kind of ratios, value, integrate, the bond market, the dollar, on and on and on and on, right? Been there, done that. Anyway, I don't do that anymore. Because the more inputs I added into the mix, the more randomness, it didn't help me. It actually was the problem, not the solution. I just thought I needed more to make it better, but turned out that more was the problem. Because, as I said, previously, too many inputs, too much randomness. Now, again, this is a VWAP to VPOC that I would not take. And I'm saying that to you because that's just the facts, Jack. And it doesn't mean that we won't get to the target. It's called mean reversion. And I already mentioned why I wouldn't get involved with this. But it has a lot of the pieces. Mean reversion is outside in trading. This is the in, the retail price. Think of this like shopping. What's too high? Well, right now we know that is. What's too low? Well, outside edges are typically the way you trade this. It's the reversion is, that's the mean or the mode. So the market, the idea of this trade's to come here. Okay. And again, I just want to tell you, I wouldn't take it. Doesn't mean that it won't work. I just have my statistics. I have found that I don't want to join with my stop here if I know there's stops under the mid. You see? Now I know it can go here because if the mid wasn't here, this is a long for me. So I know I don't want to exhaust that, but I'm just letting you know. This is a structured trade, and again, it's disqualified for me. But here's why it would be qualified other than this thing for me. What does the market do? If the trend, if we think the direction of the market intraday is up, if we rejected pricing below, so as long as I think the trend might be up, notwithstanding FOMC and everybody did their thing already, I only have long trades unless I'm a counter trend trader and I can trade either side. I do, but for the stream and for developing traders, you have to kind of put a stake in the ground and try to align with the dominant side. If you keep statistics, which you must do to know where your edge and your trades show up, you might find that taking a mean reversion long has a higher probability than taking counter trend shorts, even though they both win. But you may find in a up configuration that the longs do better. If you had that information, would you still take the shorts if they had a lower probability in this configuration? Or would you skip the shorts, use the shorts for trade management, like I showed you over here, and then only take the longs for continuations? It's a question. The answer is in the data. And if you don't have the data, you can't even ask the question, let alone answer it. Does that make sense? How we do it in YouTube? Lee, I don't call trades. What would I consider a valid long if it does this and that? I'm going to be reading order flow. And I also know we have to remember another piece. The market goes up to go down, and we have FOMC. FOMC is not another walk in the park. It is the most important input that we're going to have besides what's going on in the conflict. Or tweets or, any of this stuff. So there's variables and randomness. So what I am going to do is observe this, but the market may, and I know I have this. So these are areas I'm going to look at. It's not a trade I might even take. I'm kind of gotten to the place in my trading where I'm much more relaxed about it and patient. If I sense, in other words, right now I think there's a bit more uncertainty for long continuation trades, and that's because of FOMC. So now this is an area to observe. This is an area to observe. Come on. So these are areas I'm going to just be looking at behavior. These are not trade recommendations. The sweep was interesting, but the mid's the problem. So if we can get under the mid, and then it just doesn't do the Acapulco cliff dive. Don't forget, this is another outside edge. I've got two locations. I've got this one, and I've got this one. So these are my locations to go there. And it's pure auction mechanics. You guys have questions. In the meantime, here's a little something else to look at. Let me just point something out to you. You see this? This is selling delta. Why did the market not go down? What do I have over here? Where's my sellers? I got some there, but if these buyers now are stronger than the sellers, that sets this up, you see. So again, this is not a trade I would take, but it is a structured trade. I just have certain qualifiers for it. And I'm completely indifferent about it. There's too many opportunities, and I think that for me make more sense. Anyway, this is where you're trying to go. So, if you took this, and I don't know if they're taking this in TraderLab, you'd be scaling in front of this, and then you'd be managing your trade, and the outside edge is going to be here. So, that's up to you. But this is called mean reversion. There's a specific name for this. So, and I've shared that in the 60 PDFs that I talk about. That's all available in TraderLab. But if you're interested in TraderLab, use the link in the bottom of YouTube. And if you find value in the stream, by the way, there's no cost for TraderLab, but it's only for serious traders. It's not romper room. Okay, no offense to anybody, but and this is what the TraderLab community looks like. I want to show you just so you can kind of see what's going on in here. Posts and sharing of ideas and mutual support. Trades are being posted and a lot of research. The TraderLab is an advanced trading methodology. Now, advanced doesn't mean complicated. There's a big difference. What's advanced about it is this is not about your indicators or your wick on your candle or your Fibonacci or Elliott wave. It has nothing to do with that. This has to do with the absolute basis and function of the market. It's an auction. The reason we have a market is to try to figure out what the participants think is too high, too low, and fair. And the other part of it, just to make it joyous for you, is it's happening in all fractals or time frames. I don't use time. The market doesn't operate on the clock other than the RTH open close as an example. The market operates on what the buyers and sellers do. So if this is too high, and remember, where's the scale? Right ahead of this, if you took the long. So you would have that much in that long if you took it. But this is the structure of the trade. Scale ahead of this, and then either we get through this, come out the other side, or it's still too high. You see? So in mean reversion, this is where you're going. So that's you could see, you just saw it, a mean reversion trade. And the stops are under here. So that, for me, not so much. Now, the other thing is our library of webinars. And Ned, thanks again for doing this for us. Ned curates this, keeps it organized. This is the primer webinar, gives you a high-level overview of this process. Start with that. Stop gambling, start winning, really. If you're just having, random winning trades, and we all do that, all have it, and everybody's done it before you, and you're doing it too, watch this. It's going to give you a little sense. And this one, trapped in trader Groundhog Day, working hard, waking up in the same place. And that's because you're tuning, tweaking, and you don't have an edge, but you don't know that because you're trying to solve for certainty in an environment that's completely uncertain 100% of the time. Casinos operate in the same environment. 100% uncertain 100% of the time. What is not uncertain is that they're playing games with an edge and they have the discipline to execute the edge. We don't have the discipline because of our emotional triggers. We're fearful. We want confirmation. What are we listening to? Want confirmation. That is our primal wiring to avoid the saber-toothed tiger. What happens if you can't get confirmation? What's the best? What happens if the best you have is maybe? Right? Well, if the best you have is maybe, which is the same as the casinos, then it's not about your P&L. It's about only interacting when you have an edge. And over time, if you do have the edge and you execute it and you can disassociate from your emotional attachment to outcomes, same as the casinos, over time, even though you're going to pay the gamblers, which the casinos do, you're going to extract the dollars from the other participants. Does that make sense? By the way, there's a document section. Those 60 PDFs of structured trades. This is not plug and play. If you're looking for plug and play, this is not going to do it for you. This requires you actually learn how to trade. I know. We all think it's a software toolbox. And here's the other question for this astute group of traders. Why are there like 150, 200 indicators in a trading toolbox? Here's why. They all work randomly. And the traders that use them, and I'm sure there must be some exceptions, in mixing timeframes, all get the same outcome. Random winners, losing process, most likely. And again, you might be different. Opening context alignment, 60 structured trades, market structures. Thanks, Matt, for posting that. Auction market theory. What is this thing? Tips, glossary, understanding mental obstacles, and then more webinars, the best of, And as I said, I get requests for, real-time narration. Really don't have time for that. But there are webinars in the library here that go 5 hours, 4 hours of just continual real-time narration. You can see this process. And I do the same thing. What you'll notice is when you watch the stream, I am doing the same thing every day. My trade plan, I bring it to the market. Do you know that all the planning is done outside? All the research, all the vetting, all the statistical probabilities are extracted outside of the market. Our job in TraderLab is to show up with a plan that has an edge and hang out and wait for your trade. It's like waiting for a bus. And then interact and that gives you the confidence to manage your fear. So you're trying to manage your fear with certainty and confirmation. If that is in your vocabulary and if that's circulating in your mind, that's a problem, in my opinion. That is emotionally driven by your primal wiring, not by the business. I think, personally, not a recommendation, the thought process should be maybe it'll do this, maybe it'll do that. Where might it do it? And will it do it this time? I need to try to get risk neutral and based on a vetted plan. And if I get risk neutral, I now can hang out, manage the lunatic under the hood, fear. I call it Jekyll and Hyde, Hyde, who is managed by fear. By the way, that voice in your head who's trying to look out for you but cannot differentiate the risk of a stop versus the risk of the saber-toothed tiger is always operating. And with the benefit of hindsight, is judgmental. Oh, you should have got out there. And if you have a runner, you could have made blank blank. Is that in your mind? That's Hyde. You want to learn more about Hyde? Hyde is not your friend in this business. Hyde is trying to protect you from that saber-toothed tiger. Well, you got to step into risk. The key is take intelligent risk. Are you taking intelligent risk or are you gambling? Use the link in the bottom of YouTube if you want to explore this idea further. This is about the business of trading, and please leave a like on the way out. Support the stream, subscribe to it, and also remember there's no stream tomorrow. Markets are closed for Juneteenth, but I will be back on Friday. Don't forget the like on the way out, and I really appreciate you visiting the TraderLab today.